Hey everyone, it's a tough market out there as polished diamond prices continue to decline in a slow trading environment. Now there's a seasonal aspect to it as dealers in Israel, New York and Antwerp took a week off for the Passover Jewish holiday. Easter weekend also resulted in a shorter week for the industry, while the US tax season brought another distraction to the trade. But all that is really external fluff. In reality, if buyers need goods and sellers are willing to sell, we have a market regardless of the timing. The reality of our current situation is that jewelers are still hesitant to make those large inventory purchases that typically drive the market forward. And that's not to say that retail sales are stagnant. Rather, jewelers tend to express greater caution in their buying habits amid economic uncertainty such as we are facing right now. But it's not all doom and gloom. Signet Jewelers, the largest jewelry group in the United States, told investors this week it is ahead of schedule on its way to becoming a $9 billion revenue company. In fact, Signet raised its target annual revenue to $10 billion to achieve that within 5 years, with short-term growth driven by a re-emergence of the bridal category. The number of engagements or proposals is currently increasing after dropping off significantly during COVID. Signet expects a strong rebound in engagements during the fourth quarter peak season this year and bridal to drive its growth in the coming years. Signet holds a 9.7% share of the US jewelry market and it's hoping to raise that to a range of 11 to 12%. Now, its biggest competitor is the independent jeweler. So it'll be interesting to see how that dynamic plays out in the coming years. What do you think? Where's the competitive advantage that independent jewelers can leverage to stave off that threat posed by that Signet juggernaut? Another positive retail story is the recovery in Hong Kong, even though mainland China remains relatively slow. Chow Tai Fook reported retail sales rose 14% year on year in the March quarter, while Luke Fook's same-store sales soared 83%. And both companies noted the return of tourist shopping in Hong Kong, which boosted their numbers. For now, though, that retail momentum is not trickling down to the rest of the pipeline. Anyway, I think the majors may be outliers at the moment, as the Signets and Chow Tai Fooks of the world are better able to manage a slow market. There are pockets of good demand in polished, such as elongated ovals, emeralds, and cushions among the fancy shapes, and fancy colored diamonds are also doing okay. But overall, dealer sentiment is not great. Similarly, rough trading is relatively slow, with prices weak on the secondary market as polished production levels remain below capacity. The drop in manufacturing levels this year was evident in India's first quarter trade data, where rough imports fell 22% to $4.2 billion, while polished exports dropped 16% to $5.4 billion. Remember, India is the major manufacturing sector, so the rough that the country imports and the polish that it ships out gives us a good indication of polished production levels. Sure, so there's a lot to digest. I think that the coming month or two will be crucial for the industry to understand industry trends, particularly with the Gem Genève show coming up in mid-May. And then, of course, we're all betting on Las Vegas with the shows there coming up on June 1st. We'll continue to try to make sense of the market as those events approach. So subscribe and like this video to stay up to date with us. Meanwhile, check out our sponsors on rapaportauctions.com for a schedule of upcoming melee, single stone, and jewelry auctions. You don't want to miss out on those. Thanks for watching, everyone. Have a great week, and we'll see you next time.